2 weeks ago, when Nifty Bank was knocking on the 60,000 door, our view was that an all-time high isn't a cliff. It's a steel-reinforced floor. Today, the Q3 results are in, and the raw nerve that we exposed is now verified fact. The Indian banking sector is officially the cleanest it has been in our lifetime. If you have been waiting for a 2018 style crash where gross NPAs were at 11.4%, you are waiting for a ghost. The fat we trimmed from IT and oil is moving into the very institutions that are about to fund India's 11.21 lakh crore infrastructure boom. Let's check on our anchor. While the rest of the market doubled, HDFC Bank sat still and time corrected for 2 years. The Q3 numbers just hit a standalone net profit of 18,000 crores, an 11.5% jump that actually beat the street's estimates. But the market is fixated on fatigue because deposit growth is trailing loans. The credit to deposit ratio is still at about 99%. This is exactly where the active investor wins. We aren't buying the breakout, we are buying the most attractive valuation since 2019. The bus isn't leaving without you, it's just letting the impatient passengers off. Adding to our clean sheet thesis, the execution fortress ICICI Bank. They reported a minor 4% dip this quarter and the headlines screamed miss. But look at the health of the balance sheet. The dip was due to one-time off provisions for agri loans and standard assets mandated by the RBI. The real metric, their NPAs eased to 0.37%. When you have a bank this clean with stable margins of 4.3, you don't trade the quarter, you own the engine. Then there is our power fortress, SBI. If you want to play the 11.2 lakh crore government CapEx, you buy the lender who writes the checks. With corporate loan growth picking up, SBI remains the primary beneficiary of the Feb 1st budget. And for growth, our speedboat, Bajaj Finance. They grew their assets by 22% this quarter to 4.86 lakh crore by pivoting away from small, risky ticket loans into gold. With gold at record highs, their collateral has never been safer. This is not just growth, that's secured growth. The strategy is playing out as we researched. We targeted an entry in the 59,500 to 59,700 zone. And the recent momentum fatigue at the 60,300 levels is giving us exactly that window. We have secured the consumer, we have now verified the capital. There is no need for noise when the balance sheets are this clear. Thank you for following the logic and trusting the process we have built together. Tomorrow, we move to the final pillar, the Black Swan Insurance. So thank you for your time and thank you for tuning in. Subscribe if you like this content.